right, let's switch gears now and bring in our first guest of the show. Joining us now is Jim Bianco, President, Bianco Research. It's always lovely to talk to you, Jim. Let's get to what we're likely to hear this week as far as this whole K-shaped economy, because when we talk about this, which we do very often, it's important to point out exactly what that means, because you've actually argued that this is really about inflation and not jobs. Can you unpack that for us?
Sure. The K-shaped economy is basically that the top 10 or 15% of income in this country is doing very well. The bottom 50% of income is struggling. And the question, and this is unusual. If you go, you could argue that there's been Ks in the past, and there have been, but not to this degree. So what is the cause of that? You could argue, as a lot of people say, it's jobs. They're fearing that they're going to lose their jobs. But unemployment is not up, even if we go with the estimates, although we haven't gotten a number in a few months. So what is it that you're seeing? You saw it in the elections the last couple of weeks. You see it in the political polling. It's about affordability. It's about prices. It's about the cumulative rise of inflation since the 2020 recession, which is over 25% right now. That's the breaking point for the bottom 50% or the bottom half of the K. So it's really about prices and it's about inflation. And yet people are still arguing, no, the Fed needs to cut rates to try and stimulate more jobs because that's why people are unhappy. I think we're missing the boat here.
Yeah, I mean, certainly as far as if you have a job, you're more inclined to spend your money. But even if you don't have a job, you still need to buy your milk, your bread, your eggs, etc. So you raise a very interesting point there. What is this week likely to tell us, Jim? Because we're going to be hearing from the Nvidias of the world, but we're also going to be hearing from, as I mentioned to KG, more than half of retail market cap, your Targets, your Walmarts, your Home Depots. Is this going to amplify the K?
Yeah, it should. I mean, Target has been very good at giving us a lot of detail about what the lower income consumer is doing, where they're spending their money or not spending their money. And I suspect we'll get another good update from them when they do report as to what is happening with the lower income consumer. Target, by the way, has been one that has been very vocal, talking about what is really pushing back or hurting the lower end consumer is not a lack of jobs, but it's the prices. Prices are up too much right now. And that's really where's the big problem.
Yeah, I mean, it's been interesting listening to all this Fed speak as well over the last course of the couple of weeks that we haven't had the data. We've been in this sort of data void. It looks like it's going to be a close call, Jim, and I'm keen to get your thoughts on what we're seeing here. I mean, the CME Fed futures, as far as what they're betting on with regards to this rate cut, has fallen below 50-50 now. But, you know, we've also had Jefferson out this morning talking about how the current policy stance is somewhat restrictive. You have Collins, Schmidt, who are reluctant, Kashkari on the fence. I mean, how close is it going to get?
Well, this is unusual to see it at around, you're right, it's around 43% right now. Call it 50-50, it's close enough. To be this close to the meeting, like we're 3 weeks away from the meeting and we still haven't decided what the Fed is going to do. But there's something more important going on here. Last week, a week ago today, the probability of a Fed cut was 70%, ended the week at 43. What happened last week? There was no data. The government was closed until Wednesday. Jay Powell didn't speak. But it was the cumulative argument from everybody else. It seems like all of Trump's bashing of the Fed is finally starting to take hold and that they're becoming more independent. And that the Fed is now no longer, what does Jay Powell think? It's more tally up what all the 12 voters think and which one is going to get to 7, a majority. And right now, it looks like 5 of the voters are saying that they don't want to cut rates at the December meeting. Now, if we do get a rate cut, it's very possible it's going to be a 7-5 vote in order to get a rate cut. Or it's very possible that, you know, we don't even get one at all, that some of the others come across and that they vote the rate cut down. But it's no longer about what does Jay Powell think. It's what do each of the voters have? And you just take a tally sheet and go, this one's on the cut side, this one's on the hike side, this one's on the hold side. How do we get to 7? Very different from what we've seen over the last many decades of how the Fed works. And again, I think it's all the Trump bashing that has gone on with the Fed, that they're pushing back about their independence. And they're saying, I'm an independent voter and I'm going to vote independently. And that's what we're seeing right now.
Right. And so beyond just the headlines, who's going to cut and who's not going to cut or what they think, I mean, there's a very nuanced debate going on under the surface. And, you know, that's certainly been the case with the jobs, whether it's a supply issue, whether it's a demand issue. But I'm focused on the inflation this morning just because Jefferson was interesting talking about how signs of inflation are showing progress towards 2% ex tariffs. Where do you sit on this whole debate as to whether we are going to just see this as a sort of one-off or transitory type price increase?
I was going to say, this is one of the three big questions that the Fed is really struggling with. Are tariffs a one-off increase of inflation? That is, if you read most of the Fed officials, that is an open question. They're all over the lot on it, and they should be. We really don't know whether it is or it isn't. The other two questions are, is the labor supply, meaning that, you know, the closing of the border, no more immigration into the country, mean that maybe we only need 20,000 jobs a month in order to meet population growth. And therefore, if we're getting 20,000 jobs, which historically look like a bad number, it actually isn't. And then the final question that they're struggling with is, what is the neutral rate for the funds rate? You know, Schmidt came out from Kansas City and said, we might already be restrictive. And a lot of other Fed officials are saying that we're accommodative. So they're really struggling with all of these questions. Now, to your original question real quick about the one-off on tariffs, we're 5 years past COVID, and we're still not anywhere near, even Jefferson said, we're still making progress towards 2%. We're almost 6 years now past COVID. We should have been at 2% 4 years ago if it was transitory or if it wasn't any kind of a problem. There's a bigger underlying problem with prices. That's why we've got the K. That's why the public is angry. And for him to say that we're on our way to 2%, we should have been there at the early parts of the Biden administration, but we're still not there yet. There's a bigger issue going on with prices that they don't want to deal with.
Okay, Jim Bianco, always a pleasure. Thank you so much for joining me this morning. That is Jim Bianco, their President Bianco Research. Appreciate your time.